Hi there, everybody. Welcome to the webinar today, Hawaii Association of Mortgage Brokers, HAMB. My name, Judy Meredith, and I am with Kelly Dunbar today. Hi, Kelly. How you doing?
Good. How are you?
Excellent. Thank you for being here.
Happy to be here. Always happy to spend some time chatting and hanging out and, talking about mortgages.
Is there any other type of fun than that?
No, not at all. The only kind of fun can be had.
That's right. So we will give it about, it is 10:01 right at this moment. So we will give it about another 3 minutes to let everybody join. We can see the attendees growing right now. So go ahead and log in, everyone. If you've got a friend that is planning on joining with you, make sure you shoot them a text. Let them know that we are starting, that we've got Freedom Mortgage today. We're going to talk all about VA loans. So Kelly, while we're waiting for everyone, you were just here on Oahu for the chili cook-off. What did you think of the event?
So fun. I mean, it's always such a great event, number one. The chili was delicious. It's always so fun to see everyone. The community is so great. And it's, we just don't get to see each other that often. We all work from our little caves and our holes now since COVID, right? We so rarely ever get in the office anymore. And really, that's the best part of our job is getting to see each other and talk to each other and commiserate together. So, you get out at Ferguson's, it's always beautiful. The food, I mean, I'm telling you, every bite of chili was spectacular. It was so fun, so different too. You think to yourself, like, after the third or fourth bowl, it's not gonna be that different. No, every bowl is so different.
Yeah, exactly. Sweet, kind of salty, and then some of the and then we had all red sauces this year, but last year we actually had a white chili, which was really great, which actually led to a question, technically what makes it chili, right? Folks would think that, beans and the tomatoes, and the spices make it the chili, but white chili is definitely a thing. But we had all red chilies this year. And then who was the winner?
Winner, I know, I was just trying to think
Oh,
too.
it was Lenshore. It was Lisa Cathy with Lenshore with that amazing chili that she had.
I think she was nervous because I remember she was not very happy about it.
I thought that she was number one. We'll have to revisit. We were having so much fun with the airplane throw, and
Right,
I think we were distracted.
So funny.
That's awesome. But yeah, the chili was so good, and then all the toppings that they had was really good too. So some had cornbread.
You got the corn dogs, like the little pigs in a blanket. Those were delicious.
Yes, the pigs in a blanket. Oh my gosh, it was such a cheat day. It was so awesome.
So fun.
Wonderful. All right, we've got about 15 attendees now. We're going to go ahead and give it one more minute and then we'll get started. Aside from chili, what's your favorite thing to cook? Kelly, you're in really good shape. What's your favorite thing to cook?
I love to cook, but here's a funny thing. I rarely make anything more than once. I just feel like there's so many incredible flavors out there and there's so many things to try. My poor kids are constantly being asked to try something that they've never even heard of, flavors from everywhere. I am a very adventurous cook, and luckily they mostly turn out pretty well. My kids eat almost everything I make. It's very rare that they don't or they don't like it. So I'm very fortunate about like very adventurous eaters as kids too. But I just, even if I think I've mastered it, I don't want to make it again. I want to move on to something new. There's so much good stuff to eat.
And I think that's what all those Instagram videos are for too, so that you can watch those so they get inspired. Okay, awesome, everybody. It is 10:05, so let's go ahead and kick off this webinar. So welcome, everyone. Hawaii Association of Mortgage Brokers, HAMB. We are here today with Kelly Dunbar with Freedom Mortgage, and it is springtime, so it's spring into action with Freedom Mortgage. We're going to hear all about VA loans. Our usual format, as you guys know, she's going to give us a presentation and great education. And then after that, we are going to open up to a Q&A. So please make sure that you are typing in your questions. We'll read through them as we go along. And of course, her presentation today is on VA loans, but does all kinds of govy, and she's an expert in all of those arenas. So just let her know what questions you have. And so we're going to start off today with our sponsors. So platinum sponsors for this year: Freedom Mortgage. Thank you, Kelly. The Loan Store. Gold sponsors: Finance Factors, Angel Oak Mortgage Solutions, Title Guarantee Hawaii, Territorial Savings Bank, Home Express, NewFi Lending, and LendSure. And then for our silver sponsors, we've got Deep Haven, The Lender, First Hawaiian Bank, Logan Finance, Open Mortgage Wholesale, and Remen Wholesale. Thank you all sponsors for being a part of Hamby. You are what makes Hamby strong. Our membership is what makes Hamby strong. So thank you all for being a part of Hamby. We are so very grateful to have your participation and to have your sponsorship. Thank you. All right, so without further ado, let's go ahead and shoot right into it. Go ahead, Kelly, take the stage.
Sounds good. All right, I got to minimize my screen so that I can actually see what I'm presenting here. So, all right, I think I'm all set. All right, so today I wanted to talk about VA cash-out refinances. You know, as much as we all want to be doing IRRRLs and be in IRRRL season, it just hasn't arrived yet, right? So we think that maybe there aren't as many refi opportunities, and there really still are. So I thought it was a good opportunity to, even in current rate market, and we're starting to see rates come down just a little bit, maybe they'll keep going, start talking about the benefits of a cash out refi and using the home equity and turning that into opportunities for our veteran borrowers. So ideas of how you can use equity. You can use equity to renovate the house, launch a business, purchase more real estate, travel the world, finance education, and my personal favorite, start an alpaca farm, of course, because isn't that what we all want to do? I mean, give up mortgages and start raising alpacas. So the benefits, you know, this is just, you know, the opening slides. We'll kind of roll right through these, but you know, borrowers can borrow up to 100% of the home value. There is no other refinance program that allows cash out up to 100%. Well, maybe there's some non-QM. I shouldn't speak to that. That we offer, that I'm aware of in the you know, vanilla A paper world. There's no monthly mortgage insurance. Obviously a funding fee does apply if the borrower is not exempt, and that is going to be based on whether it's substitute use or not. Flexible terms, including odd year terms available. So you can do 10, 15, 20, 17. You can go down to the month. You can say 312 months. We can set up a term for that. If it's a borrower doesn't want to tack more time onto their loan when they do that refinance, we can meet them where they're at. Obviously, debt consolidation is an option. And adding, removing borrowers and doing a joint loan, that can become a benefit to borrowers. Sometimes they just want to add on their significant other to be a borrower, to have the availability for them to be on the loan. If they've got the right equity position, we can do that with a cash out refi as well, help them qualify, whatever the case may be. Guidelines at a glance. So some kind of things you want to keep in mind when you're doing a VA cash out, which is that the loan amount and LTV is going to be based on the value, including the funding fee. So that's a little bit different than a purchase, because with a purchase, you can do 100% financing, tack the funding fee on top, and we're all good all day long. With a refi, it's going to be a little different. You do need to include that funding fee in the overall loan amount and LTV. So that's something to keep in mind. Also, if that, including the funding fee, pushes you above conforming limits, then that's going to push you into jumbo, because that funding fee is going to be considered into the base loan amount. Something quirky for VA cash out is that properties owned free and clear are not eligible. There does need to be a lien on the property that we are paying off. So if you've got a situation where the borrower owns the property free and clear and wants to do a cash out refi, give me a call. There may be some workarounds for that we can find. There generally is, if everybody is willing and wanting to, is usually a solution we can find. Partial entitlement is available, so with the required acquisition. So let's say they already have a VA loan on a property back in the mainland. They bought a property out here with conventional financing. Now they want to refi it, but they want to refi it using VA rates, which we all know are fantastic. And that may still be possible. So we can use that partial entitlement. It's all different kinds of names, second tier entitlement, bonus entitlement. If they have sufficient entitlement, we can use that for a second VA loan for a cash out refi. So if you have, again, those scenarios, give me a call. We can work through the calculations, see what they're eligible for, see if it works. This is just something, just a key point I want to mention, that LTVs over 90% are only eligible for a 30-year term. This is actually really a freedom overlay. I believe there's not many, but I do believe there may be some smaller lenders out there who allow for a lesser term. But it really has to do with how it's sold in the secondary market. It goes into a special pool, and so because of that, the pricing isn't the same, and so we just don't do it. So, like I said, you might be able to find it, but it's gonna be something rare. Usually, if you're gonna go cash out over 90, you're going to be looking at a 30-year term. Subordinate financing is allowed as long as it resubordinates and stays in the second position. All right. Seasoning requirements for VA cash out. So these are both VA and Ginnie Mae requirements, and there's going to be, first is the loan cannot close before the 210 days seasoning, and that's 210 days from the first payment due date on the existing note. I use a website called timeanddate.com. I'm pretty sure that's what it is, time and date calculator. I think it's timeanddate.com. And there's a date-to-date calculator that go in, and so I'll pull up. So if they close their loan in February, April 1st was their March payment, you can figure that out. Maybe they might have closed with the interest credit, but you can ask for a copy of the note to figure that out. You know the first payment date, you add 210 days from that, and that is the first day that the loan can close. And what VA defines as closing is signing. So that's the first date the loan can sign loan documents. And just note to self, whenever VA talks about a loan close date, all their seasoning requirements are based on close date, and that is based on the signing date. 6+ consecutive on-time payments. That's part of that 210-day seasoning, but they all have to be on time as well. And then you must actually show that full payment history if it's under a year. You can show that full payment history with either mortgage history or credit bureau supplement, but we do have to show the payment history for 12 months. Oh, battery's running low, guys. Let's get through this. Net tangible benefit. If you are going over 90% on your cash out transaction, then you have to meet a net tangible benefit for VA to be eligible for cash out over 90%. This is the list here. I'm going to tell you the most common one used is going to be letter E, which is increasing the monthly residual income. So you are overall reducing their payments overall, including the new PITI payment, and increasing their residual income. So this makes it easy if you're doing pet debt pay down, but it makes it a little more challenging if you're just pulling out cash, because oftentimes right now we're actually increasing the rate. That becomes a bit more of a challenge. So feel free to call me on those. We can see if we can find a solution. Residual income overlay. We do have an residual income overlay. We don't have a DTI overlay. We follow DU approval. If you've got an approval at 70%, we will run with it. We do have an overlay to require increased residual income if your DTI is over 50. It's here. I will tell you this, it is an overlay. Because it's an overlay, we're very flexible on it. We make exceptions to this all the time. And also, it doesn't come up very often. Usually when you get that approval with a higher DTI, your residual income is already at these higher percentages. So it doesn't pop up very often. Bankruptcy. VA has pretty liberal bankruptcy guidelines. Because my computer's battery's slowing, I'm going to kind of breeze past this one. If you have questions, you can call. Calculations. We are happy to help with the math. If you've got that partial or bonus entitlement I was talking about earlier, second tier entitlement, funding fee on a joint loan, unrestored entitlement. Did they have a foreclosure or a short sale that is their part of their retirement is tied to still? I can help you come up with the calculation to see what they are still eligible for. Residual income calculations, IRRRL max loan amount, and 36-month recoup. And then as long as we're talking about IRRRLs for a hot minute, I also have this Excel spreadsheet. I will tell you it is created by myself and a couple other AEs at Freedom. It is not published by Freedom, and so it is not perfect, but it is pretty good. So if it's something that you're interested in,
Aloha, everyone. So it seems like Kelly's computer may have frozen. It may be due to her low battery. So at this time, while we wait for her to plug in and get back to us, I will go ahead and talk about some of the upcoming events that we have for HAMBY. So remember, please visit hamby.org, HAMB.org, and you will be able to see our calendar under the events section of the toolbar. For April, we have coming up, we've got our Hamby Golf on April 16 for those that love the golf. We've got the Keiki packing, food packing at the food bank. So March 3rd with community service, David E. Gay, we have got the packing for the food bank, which is going to be the keikis. Come down, dress for success as far as comfortability. I believe it starts at 7 a.m. And then from there we will pack until we are done, and we've got plenty of food for the keiki lunches. And then from there, we've got May 7. Make sure to join us for the title guarantee webinar, where they're going to be covering fraud, what's been happening. They're going to be sharing some scary horror stories of what's been taking place. So make sure that you're tuning in for that on March 7. And then on March 8, the following day, we are going to have the lenders roundtable. And then that it will be announced. So make sure you're just checking in and staying abreast of that so that you can join us. It looks like Callie is trying to come in here, so we'll give her just another moment to boot up. And then of course, remember, at any time, please visit hamby.org and join a committee, right? We are all as strong as our togetherness allows us to be. So please make sure that you're checking in on the committees. If you go to hamby.org and you click on committees, there is the legislative committee, there is the membership committee, there is events and conferences committee if you love events, education, come join us on the webinars, conferences, community service, and of course there is the golf committee and then technology committee. So take action, get involved. It's a great year to do that. Make it a new 2025, reinvent yourself, become a part of something great, a part of something bigger than yourself. Let's go ahead and open up the question box, and then let's see what questions come in while we are waiting for Kelly to rejoin us. So I'll give it a couple of moments to let some questions come in.
Is there anybody there?
Kelly, yes, we hear
Hi!
you. Oh, welcome back.
Sorry, guys.
Perfect. We can hear you fantastic.
Okay, good.
Do you want to walk through, finish up your presentation? We can hear you audibly.
Perfect. Yes, I can. Can you still see my screen?
We can. Mm-hmm.
Okay, great. Perfect. All right, then I'll just finish. I actually don't have very little left, almost done. So with this, I can share this Excel spreadsheet with you as long as you understand that it's certainly not perfect and I'm not an Excel spreadsheet master. But it does do a good job of being able to share numbers with your client who might be waiting to IRL, who still could benefit from a cash out refi. So you're able to go in and plug in your borrower's specific details about their existing, how much they owe on their existing mortgage, what the current value is, what their rate is, what it would be IRL. And we know we can predict an IRL because it would have to be a minimum of 0.5% lower. And you can kind of go in and play with these things and see what the borrower is looking to achieve, to see if it might make sense for them to do a cash out refi versus just waiting to IRL. So it's a fun little spreadsheet, and I'm happy to share with anybody who asks. Just feel free to reach out to me via phone, text, email, and I'm happy to send it over anytime. I think that's actually the last screen that I have here. Yep, it sure was. Talk about timing on my battery. Just taking the chance to talk about VA Cash Out as an opportunity to turn that equity into meet the veterans' needs. So let's help them make the most of their benefits. You can reach out to me anytime you want. And of course, I had to put a corny joke on there, which is, it's unbelievable what a cash out loan can do this spring. And this presentation is officially over. And I made it through.
Thank you, Kelly. Thank you. Go ahead and keep your screen up there if you don't mind, just so that I've got a reminder of your contact information. And then as we wait for some more questions to come in, I've got a couple that I picked up off of your presentation. So you had mentioned that you have that you will do any DU or LP acceptance over 50%. What's the highest that you have closed a loan at?
I have seen, and I know are you guys? Okay. I have seen DTIs into the low 70s. And I've seen them not with the most stellar credit score. I've seen them at very high LTVs. That algorithm for DU is based very largely on residual income. So if the borrower has good residual income, you will see those DTIs come quite high. I will mention we don't accept LP findings for VA. We have just found that LP hasn't updated to VA's most recent guidelines, and so we've had problems getting LP loans purchased by VA because we followed the findings. So that's until LP is up to that, we are D. Uh-oh, can you hear me?
Yep, you're cutting out just a little bit, but we can hear you now.
Sorry about that.
No worries. Okay, so I heard you say no LP, DU only, due to the guidelines not being updated through LP correctly. And then you do have a residual income overlay. So even though you said there's exceptions to that, can you tell us a story in regards to how that affected one of your loans and what happened? We may have lost her, everybody. We'll wait for her to click back in.
Sorry, I am back in. But
there you are. There you are.
Judy and I were laughing when we started this that we had mastered it. And of course, as soon as you think you've mastered it, universe will teach you a lesson.
So we have got a question coming in from Karen Klein. Can Kelly put DTI and residual overlays back on the screen?
Yes, I surely can. I may have to do it this way, but I'm sure I can do it. There we go.
Thank you
And
for
I
your
can make it
question,
big.
Karen. She's going to work on that now. And
There we go.
awesome. Thank you. Do you want to read through it just a little bit as a recap for everybody?
Yes, absolutely. So I know I kind of blew past this because I was worried the computer was going to die. These come into play anytime your DTI exceeds 50% DTI. So the reason we even have this is that because we don't have an overlay for DTI, the VA came to us and said, we want to make sure you still have the veteran's best interests at heart. So we need, to make sure that you're proving that you're doing so. So we have this residual income overlay to show that we are trying to still make sure we're lending responsibly to VA borrowers. So once the DTI goes over 50, we require increased residual income, which you'll find on your DU findings. It's usually, I think, the second to last page, where you'll have the required and the actual. And I'm going to tell you that 70, 75% of the time, you're already well above 150 or 175% residual income, and this is not an issue. When it does occasionally come up, the requirements are here on the screen. So between 50 and 60, it's 150% residual income. And between 60 and 65, it's 175% residual income. And over 65, it'll be 175% residual income plus a compensating factor. And there is a list of compensating factors in the VA handbook, but it could be reserves, it could be LTV, it could be credit history, it could be income that we can't use for qualifying, but we know is there. Maybe it's less than 1 year self-employment income or something along those lines. But as I mentioned earlier, because it is a freedom overlay, we're actually quite flexible on this. I have gotten most of the times, if we don't meet this, I'm able to get an exception.
Awesome. That is such great news. And then I have another question as well, and I know that this was specifically about VA cash out, but I think in the realm of VA in general, there's just so much new stuff coming forward. One of the biggest, issues that I've kind of run into has been, obviously home prices in Hawaii, rising. You can barely get anything for 1.2 mil these days, it feels like. So most of my veterans are starting to go well over the 1.2 mil. We're dabbing into 1.5, and then of course meeting that new increase up to the 2 million. And then the guidelines get a little bit hairy, right? So when can you include the VA funding fee? When can you not include the VA funding fee? So can you talk a little bit about VA high balance once you get to that 90% marker? I believe that if you're, and I know that depending upon different lenders, they may have different overlays on the loan amounts, but for the most part, my experience has been 1.5 million and below, you can go to 90% and include the VA funding fee?
Well, I have a really simple answer for you, which is I have absolutely no required additional restrictions based on loan amount or LTV. I can still go 100% financing, including the funding fee, up to $5 million, no problem. I don't have increased FICO requirements. I don't have a lowered LTV. I don't have increased reserve requirements. I don't require a second appraisal. I literally treat every loan as if it was 1.2 million.
Awesome. Well, that is super great intel right there, because most lenders do have an overlay. They're either capped at the 90% and or additional FICO requirements, and then of course DTI overlays as well. So that is awesome, you guys. So take note of that, that Freedom can go 100%, including the funding fee, is what I hear you saying?
Yes, correct.
Okay, awesome, up to 5 million. That is unbelievable. And you can do
there actually isn't even a loan amount cap. I use 5 million as an example. But I have funded a $6 million loan, 100% financing. I think the DTIs is in the high 60s. And we truly don't have any overlay. Only overlay we truly have is that residual income overlay. But usually at that point, the borrower's making a lot of money and they're more than meeting the residual income requirement.
Awesome, awesome. Thank you for that. That is excellent news on Freedom's home front. I'm definitely taking note of that. Okay, now the next question, and everyone keeps bringing it up also, is VA renovation. Are you doing VA renovation at Freedom?
Not at all, unfortunately. We don't have any type of reno financing. We don't offer the conventional, the FHA, or the VA. So, and I don't have a cap on who is, unfortunately.
Okay, thank you. Now, what about, we don't have, it doesn't appear as we've got any more VA questions coming in. Do you want to segue just a little bit to maybe some new FHA guidelines that have come across, or something interesting that you've seen from the Freedom side of the road that may be helpful to our audience today?
Well, I'll share this, maybe a little preview into the next video I'm planning to record and share with everyone, which is just findings for reduced income documentation. I'm starting to see these come across more on both conventional and VA really for the first time as well, where we may require less income documentation than previously. So conventional, what I'm starting to see come across on Fannie and Freddie is maybe only 1 year W-2 plus current year-to-date pay stub. And this is all based on findings. This isn't necessarily Freedom guidance, but we will follow the findings. And additionally on VA, I have never, in my experience, we do a lot of Govy, government has always required 2 years tax returns, regardless of, if the borrower's been in business for 5 years or longer, like we see some relief on conventional. It's always been 2 years required for VA. And is starting to see some findings come across that say 1 year tax returns. And so we follow all of these findings, we follow this guidance, but that's the next video I'm going to send out, and send some examples of some DU findings to share with you. So just to keep an eye on those, on your findings, because that might help your borrowers.
Oh, that is really awesome intel. Thanks for bringing that up, because I think that especially for some of us old guys, we automatically think that, going Govy, going FHA, boom, 2 years, there's no deviation from that. It's been like that since 1976, it hasn't changed since then.
Exactly.
And many of us don't even look at it, right? Because we automatically assume that we need the 2 years. We may look at it for other issues to follow, but as far as government loans, we just kind of go to the 2 years. So that is really great intel. I'm going to bring that back to my team, definitely my processing center, and start double checking that myself, just to see if we can get some relief for the buyers. I mean, the reality of it is it is so hard to qualify now when we're in Hawaii. These price points, these maintenance fees going up. One of the things that I have been loving the FHA loan for is that it has been a solve for many of our condominium issues. Why don't you speak to that a little bit, Kelly? Because I know that has just been such a hot topic. Why don't you tell us about your SUA situation, how you've been able to use that to solve for some of the buildings that are on the unavailable list for Fannie?
Yeah, I've had some good success with that. I'll tell you that if it's significant deferred maintenance, that may still be an issue with FHA. But if it is, we're not diving into that nearly as much with FHA. It's only going to be something if it comes across like in the condo docs that come over from FHA or from the HOA in requiring the documentation for the SUA approval. But I've had really good success with those SUAs. And I've had deals that didn't work, Fannie Freddie. We were able to flip to an FHA SUA. So I've also had deals that have fallen through. I don't want you to, it's not a catch-all for every deal that doesn't work, Fannie Freddie. But there's definitely a light at the end of the tunnel, possibly, if we can flip it to an FHA SUA. But that's been a really good process. And, realistically, I just think it's opened up FHA so much to the islands, right? Because especially Oahu, because the median price point of a single family is well above FHA limits. We know that. So FHA really only applies to condos really on island. I mean, that's not true, but I'm talking in broad strokes. So it applies to condos. We didn't have very many approved FHA buildings. So the single unit approval has really changed our ability to use FHA financing with our borrowers. And it's something that I think it just needs to stay on everyone's radar because it really does open up so many opportunities. And, you know, the nice thing too with FHA and VA is they do go higher than 50%. If you get it on the AUS approval, they'll go higher 50% DTI. So it's giving your borrowers a lot more qualifying room.
Yeah, absolutely. I think I've seen the highest FHA that I've been able to get approved is about 54 to 56% with, as long as the application has some great compensating factors.
Yeah.
The FICO's good, they've got some good reserves, you know, things like that. And then if you do pull that higher DTI over 50%, there is a good chance that you can still gain that approval.
Exactly right. And then, you know, when the upfront MIP and the monthly MIPs were lowered, was it last year or 2 years ago? I think it was last year maybe. It also makes, because now the rate's obviously going to be lower than conventional, generally speaking. It makes it so that payment, even including mortgage insurance, is the same or sometimes lower than conventional financing.
Yeah. Exactly. And the rates are just overall better if you've got that challenged borrower with the lower FICO scores for sure.
Absolutely.
You know, we're able to get them done at 6.5, whereas if you price it out conventional, you know, 95%, you'd be looking at 7.5, 7.65 sometimes.
Absolutely.
Depending upon all of that other stuff. And then on top of that, the mortgage insurance. And the mortgage insurance can be very, very, very steep if you've got a low FICO.
Absolutely.
So that's great. And then, and then as far as FHA goes, the owner occupancy ratio, 51% on those condo approvals. Have you seen any exceptions to that on your SUA? Or is that hard and fast across the board?
Hard and fast. Yeah.
Okay.
Yeah, unfortunately.
That's what we found too. So one of the tips is maybe to go back to the property manager and make sure that they're including the second homes. You know, what I tell my staff is that, hey, it's just a document, right? You pulled it from the property manager. It took you 10 days to get it. They may or may not have even wanted to give it to you. And then on top of that, they may or may not have done their due diligence in regards to delivery and making sure that the information on that document is correct. So make sure that you're going back, asking that property manager, hey, are you sure? I mean, I just had a case where we got the lender's disclosure. It was showing 49%. Owner occupancy ratio, we went back to them because we were so close. We were like, maybe we can squeeze out a couple of second homes. They did a recount and it came back at 54%. So, so the reality of it is sometimes those disclosures are outdated. Sometimes the record keeper is not doing their due diligence or really keeping up on the information that they're delivering. So I think that there's a lot of room for error there. I definitely would not take it at face value. As a loan officer, the way I like to look at it is that we are there to represent the borrower. We are there to fight for their case. And sometimes that means fighting for their case in many, many different arenas and being experts in that space so that you can make sure that you are delivering the best value over any other broker, right? Over any other loan officer that may be in the market because of your level of expertise and your willingness to go the extra mile to win that deal and get that either condo approved or loan approved or whatever that may be.
Especially if you're competing against a mainland broker, right? Because we know our market better.
Yes. Exactly.
Exactly.
I mean, how many times have we taken an application and that mainland broker doesn't even know that property is subjected to STR,
Exactly.
They don't even know that kind of stuff. Exactly. Now, for the biggest question that we've got coming through right now is, can you speak to Section 214 of the National Housing Act, where in the guidelines for FHA, it does show that for Alaska, Guam, Hawaii, and the Virgin Islands, that the loan ceilings can be adjusted by 150%, and then it gives us that crazy number for FHA forward at 1.814. Have you seen any instances or have any, and we can't even seem to get any information surrounding it. Do you have any intel on why that shows that you can, that there is an opportunity to execute on a $1.8 million mortgage for FHA where every lender seems to be capped at the 772?
My
Or,
experience is
779,
and I wish I had more intel, but I've taken this all the way to my executive product development manager and government liaison, and have been told that we cannot fund nor guarantee 214 loans. And I haven't been able to squeeze much more information out other than that. I actually, it's funny you mentioned that, because that is on my list. I had to head back to New Jersey in a couple of weeks for corporate meetings, and I intend to corner them and make them explain this to me in more detail, when it would apply, who could possibly do it. I'm not saying that Freedom has to, but I would like to know more information about it so that I can help share and educate. So that is actually my number one on my list of things I want to accomplish when I'm back east.
Yeah, we've even reached out to HUD, and we cannot seem to get any kind of resolution on where that came from or how to apply it or when it does come into effect or when it can be applied. So yeah,
I have some
biggest
conversation with HUD about it too, and honestly, what I have from HUD makes it sound like we can do it. And when I escalated that to my team, they said that we cannot fund nor guarantee those loans, and that was about the extent of it I got. So between the documentation I have from HUD, because I do have I have a conversation email all in writing going back several times, where it sure makes it sound like we can.
Exactly. And just the fact that it says Hawaii makes everybody so sad and mad and confused at the same time. So, oh well.
I should mention that there were, a couple of years ago, I had a lender, I think it was 2 years ago, they funded above the conforming limit FHA loan under that pretense. And it was actually with a broker had done it with a different lender, and that lender couldn't guarantee it. And because we're such a big FHA originator, he said, "Hey, do you mind if I put you in touch with them? They're scrambling, trying to." And I was like, "Sure." And obviously, like we're all in the same boat together, right? And it was 2 years ago, and I escalated up every chain, and everything I heard at that point, because they had already funded it under that pretense, and was that nope, it cannot be guaranteed. There's nothing that can be done.
Oh, wow. So did that result in a buyback for the broker?
It did. Not for the broker, no, not for the broker. For the lender, the lender had to retain it. Yeah.
If you slipped it into your portfolio.
Exactly. Well, that's exactly right. It would be, to be fair, if it had been us, it would be a lot easier because we have such a large government portfolio. We probably could have, but this was a smaller lender, and broker was just trying to help them because they felt bad, and it was just one of those situations, and but it was it's funny how 2 years later it comes to life because we're all talking about this. And in my experience 2 years ago, there was a lender who funded over that amount and wasn't able to sell it.
Oh, wow. Oh, well. All right.
Yeah.
Well, it does not look like we have any more questions coming in. And what about for you, Kelly? Do you have anything that you'd like to say before we wrap up today? We can give everybody 15 minutes back of their life here.
I think that's about it. I think the only other thing that I've got on my calendar that I'm interested in is I've been advised that FHA is going to release some new income calculators and whatnot towards the middle of this month. So I'm anxious to see what those look like, and if they look like they're helpful, I'll be sure to share them with everybody. I think that's the one interesting thing I've got on the horizon right now in terms of products that we offer.
Wonderful. Why don't you go ahead and put up your contact information one more time for the folks that weren't able to write it down the first time. That way they can grab a
Will do.
screenshot or a photo and have you readily available. So yes, everyone. So thank you so much for attending our webinar today. Hopefully it was helpful for you. Again, please go to hamby.org, go to our events section, go to the calendar. Please join us March 7 for our title guarantee fraud webinar. It's going to be awesome. And then of course,
it's gonna be great.
May 3rd, we have our packing food for the keikis down at the food bank. So make sure that you're watching out for those emails. Make sure you're reaching out to your chair, David Ige, if you have any questions concerning that, and we'd love to see you there. Thanks so much for being a part of it. Kelly, thank you so much for being here. You are always such a wealth of knowledge. Thank you.
Thank you, Judy, and thank you, Hamby, for always supporting the community so well. It's such a great opportunity for us all to come together and learn and support one another. So thank you for all that you do.
You are so welcome. Thank you, everybody, and we'll see you next time. Bye-bye.
Bye.